concern assumption may not be appropriate, and the companies will be preparing their financial statements on a non-going concern basis. And what are those circumstances? One of that circumstances is when a management intends to liquidate the company. So now there is no definition of liquidation under the IFRS. However, the US GAAP defines the liquidation process as a process whereby the company converts all its assets and liabilities in anticipation that the company will no longer be in the business. So now, for instance, if a company is going to be merged with any of the other company with the ongoing business, so that would not be categorized as an ongoing concern. So, and definitely in that case, that company will be preparing its financial statement on a going concern basis. Similarly, if the management intends to cease trading, so now cease trading, the term is defined in IAS 1. And this is a process where the management is not looking for continuing the process in the trading of any activity, be it the services, be it manufacturing. So now, if a company is listed on any stock exchange and for any reason that the trading of that company, the share trading is suspended for some reason, so that should not be confused with the term cease trading, because that is entirely different. So in that case, that company will be preparing its financial statements on a going concern basis. So actually, there are two considerations for the management. One is liquidation, one is cease trading. The third situation could be where the management has the intention, but there is no ability for the management, and ultimately there is no other realistic way to prepare the financial statements other than the non-going concern basis. So in all these cases, the company will not be preparing its financial statement on a going concern basis. So now, who is responsible for the assessment of a going concern? So the primary responsibility of this assessment rests with the management, and the management is required at least on each reporting period, whether it is a half-yearly accounts, it is annual accounts, to assess the going concern assessment. Naturally, this assessment will be dependent on various factors, which I will discuss in detail in the next slide. Now, once the management has assessed the going concern assessment under the auditing standards, now there is a responsibility on auditor that he should obtain sufficient and appropriate audit evidence to conclude on appropriateness of management use of going concern and existence of material uncertainty. So what does this mean? That even if the management is saying and the auditor agrees that the going concern is appropriate, but in certain cases, but I think in most of the cases, there could be material uncertainties on the doubt of the company. So the responsibility of the auditor covers both these aspects. And after this, when the auditor is satisfied with this conclusion, the audit report will be dependent on the audit evidence, what the auditor has gathered throughout the course of his audit. Now, I say 570 going concern, it provides certain examples where the auditor will see that the going concern is not appropriate, and there are events which may cast significant doubt on the going concern assumption of the company. So what are those? Let's just discuss. We always start with adverse financial results, because one of the key objectives of any business is to earn profits. Now, if the company is not earning profits and the company has accumulated losses, negative equity, that should be the starting point for the management and for the auditors. So always we will start with the financial results of the company, because this would be I would say the starting point to trigger the going concern of any entity. Negative cash flows is very important, especially in these type of situation, because there is a possibility that a profit-oriented company has also a going concern issue. For instance, that if a company has provided a loan to its related party and the company is earning income, but for some reasons that company, the related party is not paying the cash amount to the company. So now we all know that to operate its operations, the company will be requiring sufficient cash at least for 12 months. So in that case, even if the profit and loss is showing positive results, but if there is a cash constraint, so that could also trigger the going concern assumption of the entity. Inability to pay, restructure financial liabilities, very relevant to our circumstances where now we are standing post-COVID situation. So there you will find a number of companies where, for instance, they are preparing their financials as of 30th June 2021 and their liabilities are due to reschedule. Now, if they cannot, they don't have the inability to pay or the restructure of loans, so the auditor will have to be very careful that even in this case, his company has sufficient cash and the company is a profitable operations. But if they are not able to achieve any of this, so this could also trigger the going concern problem. Loss of key management, customer, franchise, license is probably self-explanatory, but I have never seen a going concern problem because of a loss of key management. I think this will not be an issue in Pakistani environment. And when I was preparing this financial statement, I just found out that this could be a possibility where the company is operating in very specialized industry and very specialized skills are needed. So probably in that case, this could be a going concern. If a company loses one of its major customer, definitely going concern issue could arise. Now the franchises in our part of the world, you see a number of fast food franchises operating in Pakistan. Now, if the parent company pulls that franchise from any of the organization in Pakistan, it is very difficult to compete with the other, I would say, the franchises. So in that case, definitely that company would struggle to continue its operations. Licensing, probably, I think this is very relevant for the telecom sector, because telecom sector, they need their license to operate in the company, and that license needs to be renewed at each reporting date, like 3 to 4 years. So if a company is going to be, if the license is not to be renewed, so the auditor and the management, they have to be focused that what are the mitigating factors to mitigate this. Non-compliance with regulatory requirements. Now, under the Pakistani laws, I would say that this is more relevant to the financial sector companies, because financial sector companies, they have their minimum capital requirement, and few companies, they have their capital adequacy requirements. Now, if they are not fulfilling those requirements, the regulator could pull out their license, or there could be other factors that the company or that financial institution will no longer continue to exist. Change in law or regulation, this is, I would say, I think very recently, you would agree that the taxation requirements for Mudarbas, they have changed. So previously, what was happening that the Mudarba was exempt from the taxation, subject to certain conditions, but now that conditions is no longer there. So meaning, I'm not saying that in all cases, if there is a change in law, there could be a going concern issue, but there are certain changes in law where the company will lose its most beneficial aspect of the business, and that could be a tax issue. Pending legal proceedings, again, very recently in the last 2 years, Supreme Court has decided one of the most important cases relating to GIDC. So if we are doing any manufacturing company audit, or if we are working in a manufacturing company, so we all are aware that this could lead to a very potential provision in the financial statements. Now, if there is a company who was not carrying any provision in the financial statements, based on the understanding that this issue will be decided in its favor, so now this provision will be booked in 1 year, and there are chances that all the profits and retained earnings will be wiped off because of this only issue. So now, I think there is no yes or no or correct and wrong answer in this. So everything we will have to, the auditor and the management, these are all related to each other. For instance, there could be a company where only one condition could result in a going concern fundamental issue. But there will be a company where three or four factors are present, but there is a possibility that that company is a going concern. So, meaning that the management and especially the auditor should be focused on the audit evidence they have gathered, and based on those audit evidences, they should clearly and critically analyze that based on these factors whether the company's going concern is appropriate or not. Okay, now moving forward, this is the main crux of the auditing standards on the next 3 slides. And I would suggest that instead of waiting, someone, if you allow, instead of waiting the questions to the end of the presentation, we can take, because this will depend upon the discussion. So now we have reached at the situation where the management has assessed the going concern. Now, what are the implications of those of that assessment on the financial statement? This is only we are discussing the going concern implications for the management preparing the financial statements. Now, let's start with a simple thing. No material uncertainties in a company. Basis of preparation will be going concern. Financial statement impact, no specific disclosure under IFRS is required if the company is preparing is under IFRS. However, under the local circumstances, there are certain requirements which I will be discussing in the next slides. Similarly, this is also relatively simple. There are material uncertainties, and management plans would not be able to mitigate those uncertainties. Now, this is the assumption we are taking, that management is disclosing all these in the financial statements. Now, if management has already agreed that there is an issue and there is no plan for the management, so management will not be preparing the financial statements on a going concern basis. Rather, they will use any other method which we have discussed, and they will prepare the financials on non-going concern basis. What are the financial statement impact? The company should disclose that these financial statements are not prepared on a going concern. What are the bases used for the financial statement, and what are the reasons why the company is not considered as a going concern? Now, there could be one reason, or there could be multiple reasons. So all those reasons should be disclosed in the financial statements. Now, these two are interlinked, so we can discuss these two together. Now, the third one is no material uncertainties, but a close call situation exists. Now, what is a close call? Now, this is, I think this term is not explained under the auditing standards, but ICAP has issued a publication which explains the close call situation. Now, let's take an example. For example, if a company has a requirement of MCR, and the company is preparing its financial statement on 30th June 2021. So now the auditor is required to give their opinion as of 30th June 2021. So now let's take an example that the minimum capital requirement as of 30th June is 100 million. Now, as of 30th June, the company has the minimum capital of 70 million. So in this case, there is definitely a significant doubt on the company's ability to continue as a going concern. However, subsequent to the year end, in July or August, the parent company of this entity, they have injected 50 million as part of the right shares or anything. So that means the company not on 30th June, but subsequently is in compliance with the MCR requirement. So now this will be categorized as there is a significant doubt, but based on the management plans, there is no material uncertainty on the financial statements. So in that case, the company will disclose its this plan in the financial statements and specifically say that based on that plan there are no material uncertainties. This is only we are discussing about the management. We will come to the auditor part. Similarly, now the fourth part is the material uncertainty exists. Now take this example that the company is preparing its financials for 2021 June. And there is a negative cash flow situation. the company has accumulated losses and negative equity. So this is definitely an event which could give rise to a significant doubt. Now, to address this situation, what the management has done, management has prepared a three years forecast. Now, and based on that forecast, management is taking various assumptions. For instance, that the new capital injection will come in, the company will open 2-3 outlets which will boost the sale, and probably in 2-3 factors which and based on that future plan, the management is able to demonstrate that there would be sufficient profits available for the foreseeable future, that is for the 12 months. So in that case, there is a significant doubt, there is a material uncertainty, but based on the management plans, that material uncertainty is no longer affect the financial statements. So in this case, again, the management will describe the material uncertainty and the management mitigating plans. Based on that, those mitigating those uncertainties would be mitigated. Any questions, any comments? This is self-explanatory? Okay. So let's now move forward to the auditor's responsibility. Again, let's start with the simpler one. No material uncertainties, going concern, unmodified opinion. This is most of the cases the auditor will be issuing. If a company is preparing a going concern with no material uncertainty, so an unmodified opinion will be issued. Material uncertainty exists, management plan would not be able to mitigate, non-going concern basis. Now again, there is no disagreement. Management has agreed to prepare the financial statements on non-going concern basis. So the auditor will issue a clean report, but an emphasis of matter paragraph may be added. For instance, if in this case management is preparing liquidation accounts, so the auditor may issue an emphasis of matter relating to the litigation of this liquidation accounts. So, but again, clean audit opinion will be issued. These two are probably most important and most confusing. So now what the auditor will do, if these two conditions are there, there's a close call situation, there are material uncertainties exist. Now let's take the fourth one first. Now auditor has concluded that there is a material uncertainty, but based on the management plan, that material uncertainty will no longer affect the financial statements, and we are also assuming that this fact is properly disclosed in the financial statements. Now what the auditor will do, the auditor will be issuing an unqualified opinion, but they will include a matter relating to going concern. Now there is a change with if we see the previous auditing standards, with the implementation of Companies Act 2017, and which is applicable from 2018. Now the audited reports format has also changed. So in that case, now you see that previously what we were doing, we were including the going concern emphasis as part of an emphasis of matter paragraph. But now the actual requirement is that the auditor, the same wording will be used, but instead of including that as emphasis of matter paragraph, the auditor will be issuing the report, and that report will include a specific paragraph below the basis of opinion, and which is called material uncertainty relating to going concern. Again, there is no change in the wording. The wording will be standard. Only the format of auditor's report is changed. And what I think, because I think what IASB is doing, they are trying to provide more focus to the reader, because if there are multiple emphasis of matter paragraphs, and what IASB thinks that going concern is one of the most fundamental assumption, so that should be reported separately in the audit report. Now the third one is no material uncertainties, but a close call situation. Now here the auditor has concluded that there are no material uncertainties, there is no significant doubt. And just take the previous example what I gave that the minimum non-compliance of minimum capital requirement, but that requirement was the management was fulfilling that requirement subsequent to the year end. So in this case, there is no significant uncertainty, there is no material uncertainty. The auditor may, and in my opinion should,
provide an emphasis of meta paragraph, but that emphasis of meta paragraph will not target the going concern assumption of the company. Rather, they can only add that they can refer to the note which is explaining the minimum capital requirement and the mitigating factors of that company. I have certain examples. We will discuss that in the coming slides. So, any questions on this? Yeah, please. So, can we have a mic? Yeah. Mic, please.
Yes, my name is Saud Ansari. My understanding is that in case of close call situation, if the disclosure is made in the financial statements, then there is no need for to emphasize the report. Only in case if the disclosure is not given of the close call situation, then only we need to emphasize the audit report. Okay. So, it's my understanding, so you can elaborate it.
Yeah. Actually, if there is if no disclosure is made, that could potentially lead to a qualification, because now the most important thing is the auditor should understand whether this close call situation is management is mitigating that or not. If we are agreeing that, and if a disclosure is made despite of that fact, because this is in my opinion, because I just said the auditor may, or in my opinion the auditor should, because this is still this concept is fundamental to the users, because as of the year end there is a minimum I'm taking simpler example. There is a minimum capital requirement applicable to the company. As of 30th June, the company is not in compliance, but subsequently the company has made some plans, and based on that issue is resolved. So in this case, the auditor, based on the emphasis of meta paragraph, that will not cover under the going concern standard. Based on that, the auditor should provide his comments under that section, because auditing standards are silent on this. They are not saying that if the standard, because what my understanding is, there is no specific requirement that if there is a disclosure, the auditor should not be doing anything. They are silent. But now here, the judgment of auditors will kick in, because still this is a very fundamental understanding. This is fundamental to the user understanding of the users. So in that case, an emphasis of meta paragraph. But what I understand, if this is a situation, if there is no disclosure, that would lead to a qualification, which we would be discussing in the next slide.
But I think ISA is not talking about qualification in this case, because initially there are indicators of going concern, but on the basis of the audit evidence we gathered, there is no uncertainty. So it's just a disclosure we have to make.
Actually, the material uncertainty.
So if the client is making the disclosure and discussing the events and conditions, then I don't think so. We need to qualify the audit report.
Again, just if I can explain, because in this case, first we have to understand that there is a significant doubt. There is a significant doubt, but based on the management plan, there is no material uncertainty. What you are referring, that there is no significant doubt.
May I repeat? My understanding is that there are initial indicators that there is a going concern problem.
Yes.
We obtained audit evidence, and we came to the conclusion that there is no material uncertainty. Yes. But ISA para 20, 24, 824, 825 states that those conditions and events should be disclosed in the financial statements. So if the client makes that disclosure, then I think there isn't any need for any emphasis of matter or qualification. No, unless the client does not make the disclosure, then we have to emphasize only, not qualification.
I got your point. Actually, what you are referring, that will not cover under the close call situation. It's
not a close call situation.
In that case, the auditor has concluded that there is no material uncertainty. There is not a close call situation. In that case, you are absolutely right.
But we have to make a disclosure in the accounts.
That is just, I think that will depend on the normal, that will, probably we will not be covering.
Because apparently on the face of the financial statements, there are some indicators which are suggesting there is a going concern problem. But otherwise, there is no such a problem.
Just I explained that this is not a yes or no answer. Because even if
depends upon judgment, yes.
Yes, judgment. Okay. So in that case, in my view, if the auditor has concluded that there is no close call situation, there is no material uncertainty, you are absolutely right. But I'll say, even if the disclosure is made, not made, in that case, probably, I'm not sure, in that case, there is no requirement of an emphasis of matter or a qualification in that case. But
Right.
if there is a close call situation, I think that and I'm 100% sure that standards requires the emphasis of matter paragraph.
Okay.
But again, this will depend upon the auditor's judgment, and based on that judgment, the auditor will conclude its opinion. Saman, can we now because this slide will take probably 10. Sorry. This will take 10 to 15 minutes. So should we break ले ले? ले ले, तू हाँ. So let's take a 15 आप तो.
We'll take a 15 minutes break. बाहर नमाज की भी जगह है तो वज़ू वगैरह करने के लिए थोड़ा सा टाइम इसमें मिल जाएगा. So we'll resume at इंशाल्लाह 7 o'clock. Thank you.
Okay, Bismillahirrahmanirrahim. So, let's start the session again. Now, this is the most important slide of my discussion, and now we are going to discuss that what types of opinion the auditor will be issuing based on the number of factors available in the financial statements. I think this will also answer your question also again in clarity, sir. Now, the going concern basis is inappropriate, and in this case, the management is not agreeing to prepare the financial statements on non-going concern basis. So, in this case, this is very simple. There is no option other than the adverse opinion, because if the auditor has concluded that the company will no longer be continuing as a going concern, so in that case, there is only one option, and that is an adverse opinion. Now, the going concern basis is appropriate, and for simplicity, I have further divided this into two categories. Now, the material uncertainty exists. So, I think there is a slight confusion here. I would like to explain that when I say that there is a significant doubt on the company's operation, there are two conditions. Significant doubt does not mean that there is a material uncertainty, because if based on management plans, the significant doubt is eliminated, meaning there is no material uncertainty. Material uncertainty will only be coming in when the auditor has concluded that based on management plan, the significant doubt is still there. So that means that material uncertainty will continue. And what should the auditor will do now? If a material uncertainty exists, disclosure is available and the disclosure is adequate, the going concern emphasis matter paragraph will be given in the audit report, and this going concern para will be given under the new audit report as a separate paragraph in the auditor's report. If no disclosure is made, and if the disclosure is in the auditor's opinion is not adequate, the auditor will qualify or provide an adverse opinion. This will be depending on the missing disclosure and the auditor judgment, whether it merits a qualified opinion or an adverse opinion. This is not available categorically in the auditing standards. For simplicity, I have broken down the appropriate in two conditions. Now, the close call situation, again, the close call situation is that situation where the management has concluded that there is a significant doubt, but based on the management plan, there is no material uncertainty. So, in that case, if the disclosure is available and the disclosure is adequate, emphasis of matter paragraph, and this emphasis of matter paragraph will be given under the standard 705, I think, the emphasis of matter, not under the going concern. So, this is probably the confusion, that if we only talk about the ISA 570 going concern, we will be just reducing our efforts to this paragraph, going concern. But however, if there is a situation which is coming under a close call situation, in that case, the auditor may and in my opinion should provide at least an emphasis of matter paragraph. Again, if that disclosure is not given or that disclosure is not adequate, the auditor could go to qualified or adverse opinion. So this probably, if we are auditors here, so we are seeing this chart from number of years, and this will also jog your memory. This is, in terms of going concerns, is the most important chart, I would say, that because it covers almost all situations, and if there are any other situation, we will discuss in the coming slide. Any question? This? Yeah, please. Yeah. Yes.
In that case, we need not emphasize the audit report. But in the other situation, no disclosure, then we have to emphasize or qualify the report depending upon the situation. It's my opinion. So you can. Okay.
Let's discuss this. For instance, a simple example again. The company has a minimum capital requirement as of 30th June, but the company has not complied with that minimum capital requirement, right? So what should you do if you are an auditor? What should you do? Look, this is now
We will see the subsequent events, yeah.
if there is no subsequent event.
Okay.
If there is no subsequent event, meaning we will issue an adverse opinion.
Right.
Now, now subsequently in August, if we are issuing our report in August, and in August we the auditor has concluded that enough funds are available to the company, right? So meaning that significant doubt is no longer there. There was a significant doubt, but now there is no material uncertainty because the company has made some plans. Based on that plan, no material uncertainty exists. So in this case, probably if the for instance, if now the company is not making any disclosure, what will be the user reading the financial statement? As of 30th June, there is a non-compliance of minimum capital requirement with no disclosure. So in that case, what should you do?
No.
You are saying the emphasis of matter paragraph.
No, there are two things.
Yeah.
If the requirement is not met at the balance sheet date, and the company has made up plans to inject the funds subsequently,
yes,
and we are satisfied with that plans, then there is a material uncertainty exists. In that case, we have to give disclosure and also give the going concern emphasis of matter paragraph.
Okay.
But if the company has injected the funds subsequently before the issuance of the audit report, and we have verified that injection, then there is no material uncertainty.
Yes,
but there is a fact that I think ISA requires to be disclosed.
Yes.
And in that event, we need not to emphasize, we need not to qualify the audit report. We
will not qualify.
We will take no action, I think.
We will not qualify in that case.
Because there is a disclosure in the accounts.
Definitely, this will come in this category. If the disclosure is available.
We are in that category, yeah.
If the
But
disclosure
in that situation,
yeah,
where the funds have been injected subsequently and we have verified that, but the company does not give any disclosure about that, then in that case, we will emphasize or qualify that the company has not stated that fact.
In that case, emphasis is no longer an option.
It's yeah.
Because this is a material fact. Again, if the company is not disclosing, if I am a user of a financial statement, if that disclosure is not made, I will review the financial statement and I will find out there is a material non-compliance as of the balance sheet date. Agreed? There is no disclosure in the balance sheet or in the financial statements. In that case, there is no option of emphasis of matter. You can debate an emphasis of matter if a disclosure is available. But in that case, other than qualified adverse opinion, there is no option. Because just see that the auditor has concluded and management has also concluded that there is a significant doubt, but there is no material uncertainty based on a management plan. But that plan should be disclosed in the financial statements.
Okay. Actually, it depends upon the situation.
Definitely,
Everything
it will depend upon the situation.
Yeah, right.
But most of the cases, almost 99% of the cases, if the disclosure is not there and the auditor has concluded that this is a close call situation, in that case, there is no option other than a qualification. Okay. Emphasis of matter will again, we can debate that management has made a disclosure. The auditor should auditor be including an emphasis of matter paragraph, but we can I think debate on hours and hours. But this is not open for debate because this is categorically given in the auditing standard.
Okay, thank you.
Okay, now moving forward. Now there are specific considerations other than those we have already discussed. Now, the period of assessment, very critical, and this you will find always a debate between the management and the auditors. What should be the period of assessment of a going concern? Now, the auditing standards, accounting standard require that this assessment for the management should at least cover 12 months, at least should cover 12 months. That does not mean that, for instance, if the management is preparing 30th June 2021 accounts, they can go beyond 30th June 2022. And what should be the cases where the management should be preparing this assessment beyond 1 year? For instance, now there is a significant time lag between the audit. Now, 30th June 2021 audit, now auditor is finalizing its report in 2022. So meaning, in that case, the auditor should request the management to extend this assessment at least from the date of from the authorization date to 1 year. Again, this is again a professional judgment that the management would argue, but this is a 12 months period. But again, 12 months is the minimum period. We can go beyond 12 months. One more thing, that this 12 months is not a mathematical number. That, for instance, if the auditor is aware that in the 13th month after the balance sheet date there is a significant event, and the management is not taking that effect in those projections or in the assessment, the auditor again should request the management, and that the management should cover at least 13 months from the balance sheet date. Level of management assessment, this will be dependent on number of factors. For instance, if the company has a history of profitable operations, and now this is the first year of negative cash flows or negative flow, in that case the assessment could be minimal. If a company is a part of a group, a profitable group, if a company has a parent which has very strong arms, so in that case that assessment could be limited. But in vice versa, if there are situations which the auditor is aware that the company has a history of losses in the prior periods, in that case that assessment should be more focused, and the auditor should be more vigilant in this case, that he should verify all the assumptions the management is taking in the preparation of those assessment. Going concern assessment on consolidated financial statements. Now again, under the Pakistani law, every parent company should prepare a consolidated financial statement. This is the difference between Companies Act and the IFRS. Now, if we are the auditors of a group company, Company A and Company B, now the going concern assessment is not dependent on the group and a subsidiary relationship, because this is an individual exercise. Now, the management of a subsidiary company, they will assess the going concern assumption on the subsidiary. The management of the parent company, they will assess the going concern assessment of the parent company, and the company of the holding company management, they will assess the going concern assessment of the group also. So, meaning there could be a possibility that if a subsidiary is not preparing its financials on a going concern basis, but when you are auditing the consolidated financial statement, there could be a possibility that the group is making the financials on a going concern basis. Why? Because there could be a reason, there could be a situation that subsidiary is not that material to the group. So assessment of all the companies should be independent of each entity. Temporarily dormant companies, again very pertinent issue. I think if we see the current situation, we are still living in the COVID situation. Most of the good companies which they were thriving in the business in the last 2 years, they were really challenging for those businesses. So now what should we do if it's a company which is temporarily dormant? So I would say it's a very tricky one. Now we'll have to see that what are the conditions of a dormant nature of that entity, and what are the plans for the management. The simple question is, the simple situation would be, if the company is dormant for 2-3 years, so that company should not be making its financials on a going concern basis. Then that is an ongoing concern basis, non-going concern basis. Now, after 2-3 years, if the management plan has changed, so they can go to that to the going concern basis. But again, this will be dependent upon the number of situations. There is no yes or no answer. We cannot compare one company which is dormant and they are preparing their financial statement on going concern. The other company which is also dormant, that company is making its financials on the non-going concern basis. So this will depend upon the number of factors, management plans, and probably the group structure also. Non-going concern basis, local requirements. Now, under the local law, there are in Pakistan there are 3 frameworks available for the preparation of financial statement: IFRS, IFRS for SMEs, and AFRS, which has been issued by ICAP. So, but none of these framework, they don't provide the accounting framework for a non-going concern basis. So how should we deal with this situation? So now if you go back to the ICAP publications in probably 2017, ICAP has issued a guidelines on the preparation of financial statements on non-going concern basis. So because if nothing is available under the framework, so we can always follow that, and that framework is very self-explanatory, based on the IFRS, and that framework also covers the accounting policies, how we should disclose that going concern uncertainty, and other disclosure also there. So that's very good publication. I would advise, if you are preparing or you are auditing a company which is not on a going concern, so you should refer that guideline. Disclaimer of opinion. Now we have discussed the various scenarios that now we can give either the qualified opinion, adverse opinion, emphasis of matter, but there is no disclaimer of opinion. But now if we just focus on the auditing standard as a whole, now, and let's take an example that if a company has a going concern issue, we have agreed, and the company has made a plan, but that plan is based on number of assumptions. For instance, the company is assuming a discount rate, the company is assuming future cash flows, company is assuming the future injection of the plan. If there are multiple uncertainties involved in the assumptions and the auditor is not satisfied, auditor was not able to verify those assumptions. So in that case, the auditor could give, could be giving a disclaimer of opinion, but that disclaimer of opinion should not be based on a going concern assumption. That should be based on the inability to verify those assumptions management has made in order to come up with on the going concern assumption. So this is the difference, because under the auditing standard 570, there is no option for a disclaimer of opinion. But if we see the auditing standard as a whole, there could be a possibility where the auditor is giving a disclaimer of opinion. Any comments, any point, any questions? Yes, please.
और बाज़ फर्म्स ऐसी, बाज़ कंपनीज ऐसी होती हैं जो डोमेंट होती हैं और उनके फाइनेंशियल स्टेटमेंट्स अगर आप देखें तो वो नेगेटिव इक्विटी भी नहीं होती उसमें, कोई इश्यूज़ नज़र नहीं आते उसमें, लेकिन कंपनी है वॉज एस्टैब्लिश्ड लॉन्ग टाइम बैक और अब उसमें कोई एक्टिविटी नहीं हो रही, कुछ नहीं हो रही। लेकिन जो है पास्ट में ऐसा हुआ है कि SECP ने लोगों को नोटिस भेजे या कंपनी को भी कि आप जो है ना इसको जो है क्वालिफाई करें या एम्फेसिस मैटर पैराग्राफ दें। तो स्टैंडर्ड ISO 570 में स्पेसिफिक सिचुएशन ऐसी को कवर नहीं की गई है, तो उसके बारे में ज़रा बताएंगे कि उसको किस तरह पर टैकल करें।
जी, और आप ये अज्यूम कर रहे हैं कि वो कंपनी है वो उसने गोइंग कंसर्न पे अकाउंट्स बनाए?
जी, गोइंग कंसर्न बनाए।
तो इन माय अंडरस्टैंडिंग ये गोइंग कंसर्न अजम्पशन इज एप्रोप्रिएट, क्योंकि यहाँ आप ये भी कह रहे हैं कि उसके फाइनेंशियल रिजल्ट अच्छे हैं, फाइनेंशियल रिजल्ट अच्छे हैं, तो वी आर अज्यूमिंग के कोई मटीरियल अनसर्टेनिटी नहीं है, मटीरियल सर्टेनिटी नहीं है, सिग्निफिकेंट डाउट नहीं है।
रिजल्ट इन सेंस में कि उसमें सिर्फ ऑडिट फी जा रही है, कैश है और बाकी ऐसे एक्सपेंडिचर्स नहीं है, नेगेटिव इक्विटी नहीं है उसमें, लेकिन जो है वो ऑन द फेस ऑफ इट डोमेंट इस सेंस में है कि वो कोई बिजनेस नहीं कर रही
ना। देखिए हमारा प्राइमरी कंसर्न क्या है एज एन ऑडिटर, कंपनी को देखना कि क्या कंपनी नेक्स्ट 12 मंथ्स तक अपनी लायबिलिटीज मीट कर लेगी, तो इस केस में इजीली कर लेगी। अब ये डोरमेंट जो है ये मैनेजमेंट डिसीजन है, मैनेजमेंट के पास एबिलिटी भी है इस वक्त, और कोई ऐसी पोजीशन नहीं है कि जो मैनेजमेंट को ट्रिगर करे कि आप गोइंग कंसर्न में अकाउंट्स नहीं बनाएं। तो इन दैट केस आई डोंट थिंक सो कि कोई अनलेस एंड अनटिल आपने जब प्रोजेक्शन बनाते हैं, तो आज अगर हम ये देखते हैं आज तो पॉजिटिव रिजल्ट्स हैं, लेकिन नेक्स्ट एक साल के प्रोजेक्शन में देखते हैं कि कंपनी के पास पॉजिटिव रिजल्ट नहीं रहेंगे, उस केस में तो क्वेश्चन हो सकता है ये, लेकिन इस केस में डोरमेंट कंपनी पे आप गोइंग कंसर्न भी बनाएंगे।
क्योंकि समटाइम्स ऐसा होता है कि कोई ऐसा वेंचर स्टार्ट करने के लिए आप इस्टेब्लिश करते हैं, वो वेंचर फिर आफ्टर सम टाइम ऑन द बेसिस ऑफ सर्टेन फ्यूचर इवेंट्स आप कहते हैं थोड़ी देर के लिए इसके या कुछ अरसे के लिए इसको छोड़ दिया जाए, इसको बिजनेस को ना किया जाए, लेकिन बैलेंस शीट में वो ऐसी सिचुएशन रहती है। तो हमारा ये व्यू था पास्ट में भी कि SECP को भी ये इन्फॉर्म किया गया था कि भाई ये जो है गोइंग कंसर्न इशू नहीं है, क्योंकि मैनेजमेंट का जो डिसीजन है वो इसको क्लोज करने का नहीं है, तो इस वजह से इसको नॉन गोइंग कंसर्न बेसिस पे नहीं बनना चाहिए।
बिल्कुल। तो और इसमें एक्चुअली आपने क्वेश्चन किया, आई वॉज डिस्कसिंग दिस विद वन ऑफ माई मैनेजर्स। तो आज एक प्रैक्टिकल इशू ऐसा आया कि ये पता चला कि UAE में एक रिक्वायरमेंट ये है कि कुछ कंपनीज को गवर्नमेंट से लाइसेंस लेने के लिए 3 to 4 years एटलीस्ट एक आपको चाहिए होता है एक बिजनेस का ऑपरेशन। तो उसमें क्या होता है कि कंपनी स्टैब्लिश होती है, 2-3 years कुछ भी नहीं करती, लेकिन वो सिर्फ लीगल रिक्वायरमेंट है। तो जब इस केस में लीगल ये भी डोरमेंट है, टेक्निकली डोरमेंट है, लेकिन जब इसके फाइनेंशियल रिजल्ट्स देखेंगे आप, तो फाइनेंशियल रिजल्ट्स आर गुड इनफ, तो उस केस में भी नहीं आना चाहिए। तो अब अगर ये इस पे कोई व्यू लेता है कि द गोइंग कंसर्न अजम्पशन इज नॉट अप्रोप्रिएट, तो इन माय अंडरस्टैंडिंग आई थिंक कोई और रीजंस होने चाहिए, अदरवाइज इस कंपनी को गोइंग कंसर्न पे ही बनने चाहिए. ओके, लेट्स टेक वन I think one practical scenario. Okay, this is just a hypothetical situation. So I have tried to cover multiple uncertainties here in this. The ABC is a wholly owned subsidiary of XYZ. Under the local regulations, the company is required to obtain a license with an MCR of 100 million. The company has a history of profitable operations. However, the COVID pandemic badly affected the company's operations for the years 2020 and 21. Following information is available in the financials. So, if you see, this is like relatively simple. The company has a profitable history of operations, but this is very practical under the COVID situation. Just 2 years or 3 years, they are not good for the companies, for the businesses. Now, we'll take example one by one, and these all I would say all these points are independent of other observations. Net loss for the year 250 million, accumulated profit 100 million, share capital 200 million, and the company has positive financial ratios. So if we are assuming nothing is given under in the financial statement other than this fact. So now what is happening here, if we just calculate it, 250, 200, not 300 million, I think 250, 300, the company has a net equity of 50 million in this case. Agreed? So in this case, what should we do? Just now go back to this. What should we do? This is relatively simple. I think this is the only option is adverse opinion, because as of the balance sheet date, the company is not complying with minimum capital requirement, with no plan, with no disclosure. So that means there is no option other than an adverse opinion. So now let's take another example. Subsequent to the year end, the parent company has injected 300 million as share capital. Now go back to the first one. There was a significant doubt on the company's ability. Now in this case, based on the management plan, there is no material uncertainty. Why? Subsequently, the company is complying with that requirement, and now the company has positive equity. The company is fulfilling the minimum capital requirement. So in this case, the auditor should give an emphasis of matter paragraph, not a going concern uncertainty, because there is no material uncertainty. This is a close call situation. Now the auditor can go and refer to standard 705, and they can give an emphasis of matter paragraph. Again, we are assuming that this disclosure has been properly given in the financials. Okay, now this is again independent. The company has prepared financial projections for the next 5 years using various assumptions, including capital injection, which is subject to regulatory approvals. Now, this will cover under that. Now, material uncertainty is there. This is not a close call situation, because material uncertainty is there, and based on the management plan, now the auditor will have to conclude whether this material uncertainty still exists or that has been mitigated. Now, in this case, because the question is silent, so there could be 2 or 3 scenarios. Now, if the auditor has satisfied that these assumptions, the auditor has verified those assumptions and is satisfied that these assumptions are practical, so in that case, the auditor will give a going concern emphasis paragraph in his audit report. Agreed? Again, now if those assumptions are really technical, an auditor has again concluded that these assumptions, the auditor was not able to verify these assumptions. So in that case, the auditor will go for a disclaimer of opinion, or could go for a disclaimer of opinion. So, and if this fact is not disclosed in the financial statements, even the auditor has concluded that there is a material uncertainty, but the assumptions are okay, but management is not disclosing this in the financial statements. So that means the auditor will issue a qualified or an adverse opinion based on his judgment, probably a qualified opinion. The company's license will be expiring in August 2022. This is again, now 30th June 2021 is the year end. The company will make its assessment till 30th June 2022. But now the auditor is also aware, management is also aware that in August, like just after the 12 months period, the company's license will be expiring. So in this case, if the question is silent and there is no disclosure and there is no plan to obtain this or renew this license, so the auditor will be giving an adverse opinion. However, if the management has disclosed this fact in the financial statement and the management has made some plans and that plan has been disclosed, so in this case also this is a close call situation. The auditor will add only an emphasis of matter paragraph, not the going concern, only an emphasis of matter paragraph. 90% of the group's revenue is based on ABC income, meaning the subsidiary company is providing most of the financial results through the group. So in this case, if we have concluded number 3, that there is a material uncertainty, so and now if we are the auditors of a group also, so in that case this material uncertainty will be affecting the group financials also, because the group itself is nothing. Group is only 10% and the subsidiary company is 90%. And now if subsidiary company there are material uncertainties, so in that case the group will no longer be considered as a going concern. So material uncertainty, the auditor should be adding a going concern paragraph in that case. Okay, so just to conclude, this is the actual wording I have taken for our understanding from the auditing standard. So this is the requirement where material uncertainty related to going concern. So how should we disclose this fact? Like, we have to draw our attention, because the disclosure should be given in the financial statements. Otherwise, this will be converted into a qualification. So we will draw attention of the users in the financial statements, which indicates that the company incurred a net loss resulting accumulative loss. It will definitely depending upon what are the negative situations, along with other factors as set forth in note, indicate that a material uncertainty exists that cast significant doubt on the company's ability to continue on going concern. Our opinion is not modified, and when we refer to the note, where in the note the company will provide its mitigating plan, that how these negative current ratio or negative results the company is planning to mitigate. So in this case, the company will be issuing, the auditor will be issuing a clean report with a going concern uncertainty para. In the similar case, if an auditor has concluded that this is a qualified opinion, so now what should we do? The company incurred a net loss of this same. Further, the situation indicates that the material uncertainty exists. That makes this similar. The financial statements do not adequately disclose the fact, meaning that there is a disclosure in the financial statement, but in view of the auditor, that is not adequate for the understanding of the users, and that disclosure will not be mitigating the uncertainties. In this case, the auditor will be issuing a qualified opinion or an adverse opinion. And what will be the opinion? In our opinion, except for the incomplete disclosure of the information, the accompanying financial statement gave a true and fair view, and again as per the audit report. Adverse opinion, this is, I think, probably very clear, that the company, as of the year end, the company is not in compliance with its minimum capital requirements. However, the financial statement do not disclose these factors. So this is a major development in the financial statement. The auditor has concluded the company will no longer be a going concern, but the management is not agreeing with this to the fact and not disclosing this fact. So in that case, the auditor will issue an adverse opinion. In our opinion, because of the significance of the matter, the financial statements do not give a full info. And I just missed one point. Like, for instance, if the auditor has concluded that the company is not a going concern, even in this case, if the management is disclosing this fact in the financial statements, that again in that case, and the company is preparing the financials based on a going concern, the auditor will issue an adverse opinion. So just mere disclosure of this fact will not be the auditor should not should not be only emphasizing the report. Rather, this will again be triggering only an adverse opinion. Emphasis of matter. This is not under the going concern. This is under the I 705. We draw attention to the note in the financials which explains the company's MCR position along with remedial action plan. Our opinion is not modified. This is relatively simple. That financial statements there was a significant doubt based on the management plans that there is no there was a significant doubt, but based on the management plan there is no material uncertainty. So in this case, the auditor will refer to the standard 705 and will include an emphasis of matter paragraph. So this will conclude my presentation, and now if we have any comments, any questions, I would be really happy to answer those. Yes, please.
I have two questions.
Yeah.
The first question is, if the period of assessment, let's say, is done for 3 years, right? And there is a significant event which will cast a material uncertainty after 2 years, let's say.
Sorry, can you please repeat the question? Yeah.
Sure, yeah. I'm saying if the period of assessment is made for 2 years, and after 2 years there is a significant event that casts a doubt, would you still issue going concern financial statements this year?
Okay. Now, like Param said in the presentation, the requirement is only to assess it within 1 year. And if you think about it, it's very unrealistic that the auditor will have the visibility for 2 years of any entity. So normally you look at just 1 year, year to year. So now, to answer your question, 1 year is enough to make this assessment for the auditor, because 2 years is too long a period for an auditor to have a visibility.
Okay.
I would just like to add one thing, like just take this example, this particular company, this is a licensed company. Now, if the auditor knows that after 2 years, this license will be expiring, after 2 years. Now, the management has made assessment for 1 year. Again, the auditor will request the management that specific only for this, if there is any plan to mitigate this risk. If the management has agreed and disclosed this fact, and there is a mitigating factor, in that case, just only the emphasis of matter is, again, just Nadeem Saab mentioned. But this is probably very, very rare situation that in this, otherwise it will be prepared, the auditor will issue an adverse opinion.
And my second question is, if there is a material uncertainty and on that basis you don't prepare financial statements on a going concern basis, but subsequently after issuing the report, the financial position becomes better and the company starts to operate, and now there is, a valid going concern assumption. So would you have to reissue prior year financial statements on a going concern basis as well, or would you give an opinion on the comparative of your proceeding year?
You mean that 30th June 21, the auditor has given his opinion, and that was not based on
going concern?
Now, when the auditor report is issued, I don't think so. There's nothing is required now. When 2022 will come, in that case, first of all, the management will make their assessment, and now if their assessment is the company is a going concern, and if the auditor is satisfied, only those financial statements will be prepared on a going concern, with no restatements. But there will be a disclosure in the financial statement that previous year financial statements were not made on going concern based on this. However, now the management plan is this, and based on that, now this is again a company is a going concern. But I would say it's a very, very rare situation. I have not seen this in my entire career. Nadeem Saab also, you probably.
Thank you.
I need your suggestion. What will be the basis of preparation in case of merger of entities? The management is preparing financial statement, last financial statement I would say, before merger. What will be the basis of preparation for the company that will cease to exist before merger?
So So your question is like if entity A, if entity is making its interest on going concern, but we know that this A will be merged in B.
Yes.
Right? And now actually if the company is merging as an operating activity, as entire business will be
Will be transferred. Entire business will be transferred.
In that case, the going concern assumption is valid.
And the company will prepare financial statement normally without not on net realizable value or on breakup value basis.
Because it is a going concern.
Yeah, because the entity is being transferred into the other entity as a going concern, as an operating unit. It's not like asset held for disposal. It's just the entire operations are being shifted into and so the surviving entity will prepare the merged account. The other entity which has so what I was saying is surviving entity will prepare the financial statement and the entity that is being merged, obviously this will not be in existence in the next year. So yeah, to answer your question, the accounts will be prepared on a going concern basis.
Without mic correct.
सर इसमें आवाज नहीं आ रही.
अगर एबी होल्डिंग कंपनी है और XYZ सब्सिडियरी कंपनी है, XYZ के ऑडिटर ने
सर यहाँ है.
तीन एलिमेंट और कंसोलिडेटेड फाइनेंशियल स्टेटमेंट में ये इंडिकेटर जो खत्म हो गए, पॉजिटिव नहीं हो गई, और तो क्या कंसोलिडेटेड के अंदर उसका हो जाएगा डिस्क्लोजर और रिपोर्ट के अंदर?
Again, just in following up example, में कहा था कि it all depends on the size of the subsidiary. In this case, if the subsidiary was 90% responsible for the operations of the holding company, yes, वो वहाँ पे भी जाएगा. But then again, if the subsidiary is very small and it only accounts for 10%, then maybe it will not affect the consolidated financial statements.
कि आपके जो आप जो एग्जाम्पल दे रहे हो उसमें ये लग रहा है कि क्योंकि ग्रुप के पास वो इशू नहीं है, ग्रुप के पास इशू सब्सिडियरी में इशू था जी, ग्रुप में नहीं है, तो नहीं है. अब हमें एज अ ग्रुप देखना है, एज अ ग्रुप गोइंग कंसर्न है तो वो इशू रिजॉल्व हो जाएगा और देयर इज नो नीड फॉर अ गोइंग कंसर्न. और उसका एम्फेसिस जो आप बात कर रहे हैं वो अंडरस्टैंड वो ये होता है कि अगर किसी की क्वालिफिकेशन है वो क्वालिफिकेशन कंसोलिडेटेड अकाउंट्स में रिप्रोड्यूस होती है, वो रिक्वायरमेंट है. लेकिन एम्फेसिस ऑफ मैटर की रिक्वायरमेंट ये मैटर नहीं है क्योंकि एज अ ग्रुप देयर इज नो मटेरियल अनसर्टेनिटी.
थैंक यू.
Anyone, any other question? I think it's a very right forum and an opportunity to clear whatever concerns you have regarding going concern. Nothing? Right. Okay, so I would like to thank Mr. Khurram Jameel for a very informative session. And as I said earlier that apparently it sounds that it is a very simple and straightforward concept, but it has a lot of complexities around from the management as well as from the auditor perspective. And I'm really thankful to Khurram to clarify a lot of questions. And now I would like to request Mr. Nadeem Yusuf Saab to have few words with us, the session chairman. Nadeem Saab, please.
Thank you, Khurram. Can you all hear me? Thank you, Khurram, for making a very detailed presentation. So I'll just emphasize a few points that we've gathered from this presentation and also try and clarify a few of the challenges that we face while auditing. So the first point that we wanted to make is that ISA 570 on going concern, ISA 700 on audit report, and CAM 701. The improvements and the new ISAs, they were all effective from the year December 2016. And the whole idea of improving revision in the ISA 570 was so that the quality of information and the quality of reporting can be improved. So if you look at if you look at the audit report, it requires two things, two very fundamental things. It requires the inclusion of a statement regarding management responsibility on the going concern, and it also includes the auditor's responsibility regarding assessment, management's assessment on the going concern. And if there is an emphasis of matter paragraph to be included on the matters of the going concern, there has to be a separate heading given on the material uncertainty related to the going concern. Second point that I wanted to make is that CAM is not a substitute for material uncertainty. Even just the very fact that you have a concern on the going concern, it is a CAM, but you still have to put it under separate heading of material uncertainty relating to going concern. और ये जो सारी examples अभी आप लोगों ने देखी थी on the uncertainty being given in the audit report is that you have to give a separate paragraph, and in the CAM section you can refer to that paragraph of material uncertainty relating to going concern. A third point that is very important is that we as auditors tend to look at just uncertainties, and client makes a lot of effort in trying to persuade us. So with every uncertainty that is there, you also have to look for mitigating factors, and the client will show you the mitigating factors. So as an auditor, it is your responsibility to, with a very open mind, look at all those mitigating factors that are there. And if all those mitigating factors are disclosed along with the uncertainty, then you can very safely put an emphasis of meta paragraph in the audit report. Fourth point that I wanted to make is that I don't know if you faced it, but I faced it in my practical life, that clients think that emphasis is some sort of a mild qualification. कोई भी matter पे if there's a disagreement, they say यार आप ऐसा करें, emphasis डाल दें, even though if it will be a matter of uncertainty on the going concern. Because, and to answer your question, that you can only emphasize something which is fully disclosed. अगर कोई चीज़ disclosed ही नहीं है, तो obviously there is nothing for the auditor to emphasize. So the point that I'm trying to make is that emphasis could be of anything. It doesn't just have to be on material uncertainty. But wherever there is an emphasis on going concern, the condition is it has to be fully disclosed in the financial statements by the management, and the auditor has to be fully satisfied with the uncertainty and the mitigating factors, and then the auditor gives the emphasis of matter paragraph. So you have to educate your client a lot of the time that emphasis is not a mild qualification. Emphasis, in fact, बड़ा लिख रहे होते हैं audit report के अंदर कि our opinion is not modified in this respect. The other point that I wanted to make is if, and I think Khurram touched this point as well, if there is a significant delay in the approval of financial statement, let's just say you've given the initial accounts and a couple of months have passed and still board has not approved the financial statements. So auditor, at this point, this is an indicator for the auditor to see that if the auditor, this could be an indication that there are probably some issue, maybe relating to going concern, because of which the management is not, still not approving the financial statements. So the channel of communication between you and the audit committee and the CFO has to be open for you to be able to assess that is there any going concern issue because of which the accounts are not, accounts have not been approved so far. The last point which I wanted to make is related, during the COVID-19 period, there was a paper issued by IASB in April 20, which describes a lot of other factors other than given in the ISAs, which required the auditors to assess and the management to assess if those triggers were there for you to assess the going concern. A few of them could have been and could be the foreign exchange fluctuation, as you see in these days. measurements affecting increased uncertainty and counterparty risk, and the last point is entity solvency. So these were a few of the points that were issued that I thought I'll just bring it up, that was given in the paper that was issued post-pandemic in April 2020. So these are the few of the points that I wanted to make and reiterate from Khurram's presentation, and also try to clear some of the confusions that you might have. Thank you very much.
Thank you, Nadeem Saab, for sharing your wisdom and knowledge with us. Now I would like to request Junaid Ali, member SRC, and Osama Rashid Saab, chairman SRC, to please be here and present the mementos to our guest keynote speaker and the session chairman. Khurram. First, I would like to present the memento to Khurram Jamil, our keynote speaker. Please, Khurram. Thank you very much. Now, Nadeem Yusuf Saab, please come forward to receive yours. Thank you, Sama. Thank you, Junaid. Thank you, sir. SRC email address is here. In case if you have any questions or any clarification needed, please contact us, and we will try our best to respond you in time. And now we'd like to conclude this very informative session and request you all to join us for dinner outside, please. Thank you very much.